This is a Fox Business Alert. Some positive signs for the economy, much needed here. The Labor Department reporting that weekly jobless claims, this is people filing for first-time unemployment benefits, much better than economists had expected, falling to the lowest rate since 2008.
And meanwhile, the Federal Reserve saying business borrowing is up. This is also a positive sign for hiring.
Our next guest says these economic indicators are just more proof a recovery is well underway. Davidson Investment Advisors Ed Crotty with us now. So you must be investing at full tilt.
Well, as you know, when we were here before, we've been believers in this recovery, and the indicators are basically confirming our view. We see it as very positive.
So you're putting money into stocks right now versus just hanging on to cash?
We are, and probably the most recent move we've made, at the end of third quarter, we started to become more constructive on financials. Prior to that, we were underweight, but we are overweight the industrials and other pro-cyclical
So why
tilts.
do we see, despite this positive news, why do we see the red arrows?
You know, it's tough to call one day, I think.
But all week, I mean, granted, the volume's been terrible because of the snowstorm, because of shopping and a whole bunch of other stuff, but still, aren't you surprised that more investors aren't getting in right now?
Are surprised, yes, but I think 2011 will be good for stocks.
500 million shares traded on the floor, nothing. I mean, that's just terrible.
Why not?
A lot of people are on vacation still.
Holiday. It's always like this, of course, at this time of year and in the summer, but there are people who are saying, wait, I missed the move. I mean, if you look at a one-year chart of Dow, NASDAQ, S&P, right about the time that the Fed announced it would put in the $600 billion, you started to see a move of confidence to the upside there.
Oh, yes.
Back in July.
Well, you know, QE2, the way we viewed it, was more of kind of dismissing deflation.
But have people missed the upside move, or is there more to come?
I think there's more to come.
What will the Dow be at the end of 2011?
The Dow, well, I'll
give us a range if you don't want to.
I'm more focused on the S&P 500.
Okay, that's fine.
I think we're going to be above 14, maybe
above
14, 15, 14,
wow.
15.
Wow.
The S&P 500. Well, what's going to drive it? Because that's a big move. At this point, we're at 1257.
Well, you know, with the news on, first, the improving loan growth, and also we think we're past the peak on credit concerns and credit losses, that removes a big headwind. So that alone, I think, allows us to move forward. And also remember, we're just 2 weeks after the Tax Reform Act. We think that not only we're going to see good Q4 numbers from companies, but we're probably going to see 2011 numbers revised up, because a lot of those numbers and guidance were given before a lot of this legislation was passed.
Let's broaden this out with our panel. What do you think about 1400 Dow, Dom?
I think our opinion, that's probably a little bit touch high. I think something around 13, maybe 1350 is a little bit more realistic. As much as we are looking at an economy that is improving and is growing modestly, you know, when you look at this economy and the pistons that drive it, construction nowhere near full recovery and probably not for years. Housing nowhere near full recovery and not for years. Unemployment nowhere near full recovery and not for years. That's 3 out of the 6 pistons that are really not working.
Okay.
So I do see recovery, but much more modest.
Ooh, Todd Schoenberger, he's a little bearish. What about you?
He is extremely pessimistic. Look, I see this stock market's going to do great next year. We're going to cross 1,500 in the S&P 500. The economy's going to do wonderful. All the ingredients are there. We're going to have a great year, and anybody that stays on the sidelines is a fool.
Todd Wildman, 1,500 S&P? What do you think?
Sure, that's only a little bit more than a 20% growth year over year.
But we've already had 20% growth since September.
Right. Well, you're right. But if you take, you know, just in 2010, S&P grew 13, 14%. Right. So I think it's totally doable because, you know, our economy is starting to actually produce growth, and you actually see business investment. And you see that because they're borrowing and they're hiring. And that's what you need to stimulate a recovery and added profits in the market to go higher, is business to invest and to expand, and you're going to see that expansion.
Keith, where do you come down on this?
I think we're looking at 10 to 15% on the S&P, but I don't agree with these guys that it's going to come from our economy. I think the majority of that growth is going to come from major U.S. firms. I call them the glocals because they're global and local, who are growing overseas and bringing that money back. Their money that they're lending here in the U.S. is primarily refinancing. The money that they're working with overseas, particularly in Asia, is due to growth. And I think there's a big difference there. So I'm cautious on the U.S., but I think the U.S. is going to benefit by overseas growth.
By the way, you want to mention some specific names, Keith?
Well, I think you look at the big energy companies, you look at the big construction companies, even fast food, they're growing at rates that are triple digit to our own here in the United States. And I think that's important because there's a rising consumer power over there versus something here where we're still struggling to put food on the table, chronic unemployment. I don't think the debt problem is over, so we're looking at a rocky market, even though I do think it's generally going to rise.
Trader Todd Wildman, you see the flows every day on the trading floor out in California. Where is it going? Where is the money going?
Well, in technology, I think that's going to be a driver, for 2011. That was a driver this year. You saw NASDAQ performing the best out of the three market centers, and I think that's going to continue. And obviously we're at holiday light trading and also snows that people couldn't go to work. So, but next year it should be higher volumes.
Ed?
Watch.
Last word.
Well, I do believe that the recovery is intact, and we're going to see it move higher. The comment made earlier about a lot of the overseas contributing, close to 40% of the S&P 500 earnings are from overseas. So I do agree with that comment.
Bingo, bingo.
We've got good valuations. We've got accommodated Fed. We've got all the ingredients for a good market.
Spread it around for a lot of sectors then.
Ed Crotty, good to see you again, my friend. Thanks to our panel of bulls and bears as well.